Aloha, this is Digital Micro, and you're at the Digital Micro Trading Journal, Day Trading for ROI. And this is the new video for the week starting Monday Globex, April 25th, 2022. And yeah, we've got a rocky road ahead for markets. That's not really a news flash, and I'm not being Captain Obvious, but let's just take a look of who's getting hurt and who stands to benefit. Obviously, who's getting hurt are higher time frame, weekly, monthly, yearly holders, asset allocators that are in this game. For day trading, it's a whole different story. But the Fed, the FOMC, had one goal in mind, and it was absolutely not fighting inflation the last few years. It was suppressing, compressing volatility. They had a machine, they had an algorithm, and they were compressing it, suppressing it. And they can't do that anymore because of supply chain, because of inflation, because of pandemic, you name it. Volatility is here and it's not going away. And I'm not talking about inflation. I'm talking about the up and down range movement and the schizophrenic markets that we are in. Expect more of that, at least into October. So let's go to the next slide and talk about what it means for day traders. Volatility is a day trader's friend. So this favors not a trend trader, not an investor, but bracket mean reversion traders for sure, because you see these zigzags. This is exactly what's happening this year. We're getting whipsawed back and forth, upper Bollinger, middle Bollinger, lower Bollinger bands. So we've got high volatility, and the main reason is the Fed had been crushing the life out of volatility for the last few years with their Federal Open Market Committee policies. Monetary policy since the pandemic and even before that was print a lot of money, keep rates low, crush volatility. Now they've done such a poor job. They are under the gun. The Fed is not your friend. They're actively got their backs to the wall, combating inflation. They printed too much money. They didn't raise rates fast enough. And forget all about crushing volatility. That is not the priority of the FOMC. And they said as much last week. So expect volatility. The markets may not crash, but I'll tell you what, there's absolutely no breaking the higher volatility environment that we're in, at least for the next 6 months. So there you have it for, again, non-trend day traders, especially bracket traders or mean reversion traders. We just need to make friends here with the volatility. So 2 charts, both 24 hours. I'm not trading the S&P 500s, but I'm going to look at them for a reference, especially for the Monday Globex Open. So Friday was just a car crash lower on the lower Bollinger Band here. You can see here we closed at about 42.9750 as the volume weighted average price here, and way above that here's the middle Bollinger at 44.76. So I really like here the amount of range here. We are away from middle Bollinger Band. And in contrast, on the right side, on the Russell small cap, you see here we did not go down as far because we're not tech laden with inventory. On the 2000 is totally small cap, and it's not overwhelmed with just technology as is the S&P 500. So again, let's just take a look at my markers here before Monday opens on Globex. I'm going to pay attention to the reset on the lower Bollinger Band, where price is to that, and the 3 EMA, the 3 volume weighted moving average, and then again, the range on the middle Bollinger Band. I'll then take a note real quickly to the 120, but I'm not going to do the 120 minute before I really dissect this 24-hour. I usually don't pay so much attention on a Monday open to the 24-hour, but since we closed in the red below lower Bollinger on both of these indexes, this is a big opportunity for me to pay attention, even though 24-hour setups are usually not my cup of tea because it does require an extra helping and dose of patience. It might not play out for any kind of mean reversion until Tuesday RTH, and I may go into 20 hours, 28 hours, 30 hours before the payoff. But I'm very tempted here based on what I saw on the Friday close. And again, 100% dry powder because we are not investors on this trade channel. This is, again, a day trading journal, no trade recommendations. So there you have it. This was a short video because it's simple execution after we look at how the open goes. That's all I've got. Trade them well. Have good risk management. Aloha, take care, and I'll have another video out in the week early this time. Take care. Bye.